A very good afternoon and welcome to HYCM's online trading workshop with myself, Giles Coughlin, the Chief Currency Analyst here at HYCM. Hope everybody is doing well. Very nice to be in touch with you. Hope you're all doing well. Good to have you. Hi, Titus, Vic, Warren. Great to have you on board, guys. Ahmed, yeah, that's super. Just going to give folks a moment as other folks are coming in to the webinar, just going through the disclaimer. As we look at this session, the whole idea of this session is it's from an educational perspective, and you're looking over the shoulder of someone with a professional trading background, and it just helps you inform your trading decisions from a better perspective. So if you're a new trader or beginning to trade, that's how these webinars work. And don't forget that this is a interactive workshop, so you can ask questions, and I will get around to all questions at the end. So do put them into the Q&A box or chat box, and I will check them both as we go along. I'm just going to open that now so it's clear. Okay, great. With that being said, we'll go straight over and have a look at the key sentiment for the day. Now, in these workshops, the whole idea is to help us understand how do we pair a strong against a weak currency. Now, in trading, the way I like to describe the process of choosing a currency pair to trade each day is you're looking to trade strength against weakness, just like in this diagram. You see the strong arm beats the weaker arm. You expect exactly the same. A stronger currency should gain versus a weaker currency. So the trick is to pair strength against weakness. That's essentially what we're doing. So as we look at the currency space today, there is one pair that, there's one currency that stands out, but not a pair. And I'm just going to go through how we're going to manage that. So I'm just going to change screens and go over to the charts, and we'll look at it from here. Right. You can see here, this is the pound US dollar pair. Now, the dominant sentiment is for pound strength. Now, the reason for that is there were a couple of comments yesterday from the Bank of England speakers. What we flagged in the week ahead was the potential for any interest rate comments to move the pound. Now, that turned out to be the case. We had two Bank of England members, the Bank of England's Governor Bailey and Bank of England member Broadbent. Both of them touched on negative interest rates, and both of them essentially reduced market expectations of interest rates moving into negative territory. Money markets had priced in a move by the Bank of England this year to move rates negative. Now, Bank of England's Governor Bailey and Broadbent both dashed those expectations because neither of them were very keen on moving to negative interest rates. Bailey said that, is it practical? It's not very, it's not used in the retail sector. So in other words, you can imagine the fury they would be if everyday investors were told they would lose money when they put it in the bank. There would be a huge run on the banks, and investors would, everyday investors would just end up taking their money out of savings banks and putting them under their mattresses and putting them under their pillows rather than lose money. So central banks can't charge retail investors to put their money in savings banks. So is it practical even? These are the sort of questions that Bank of England Bailey was asking. And this resulted in immediate pound strength. You see the pound strength shot up there from yesterday's comments, and the pound has been moving higher against the US dollar. Now, that would make the pound a clear buy today. But there's one issue. It's not clear which currency to trade it with. And the reason is this. The recent spike higher in US government 10-year yields, you might have heard a lot of chatter about this. The government US 10-year bond yields have been moving higher. They've broken out of that 1% level, moving up towards that near-term resistance. Now, there's a bit of a pullback going on, but that's just a minor pullback, at this stage. So the question is, if these bond yields keep moving higher, that also drags the US dollar along with it. Remember, here's the US dollar. these tend to track one another. Okay, now the relationship can break down, but at the moment that relationship is quite tight. So what it means is a rising 10-year bond yield, you can see here, is being matched by a rising dollar. Okay, and you can see how closely they're correlating since the start of the year. So they do correlate each other very, very closely. So that's one key market that's really in focus in terms of the dollar. Now, the dollar itself this morning, just take a look at it, what we're seeing is a little bit of, there was a pullback yesterday, there's a little bit of strength gaining today. So markets are undecided, particularly the US dollar, because it's awaiting a key data point, and that is the CPI data due out today at 1:30. Now, this is what's making it difficult to trade the pound against the dollar, because the market is really focused on these US 10-year yields, and inflation is a key factor in it all. Because if inflation ends up going higher, then what we'll see in bonds is we'll see a drop in bond prices and a move higher in yield. This is the yield price. So remember, if we see a high inflationary reading, so the expectations are for the year-on-year core 1.6%. Let's say the reading comes in at 1:30 at 1.8%. That will result in bond yields spiking higher, which when bond yields spike higher, you can see that will also drag the dollar along. So here's one key thing to be looking at. If we get high inflation readings, so say we get a high inflation reading, we'd expect to see a spike higher in US 10-year yields and a spike higher in the dollar. So we'd expect to see dollar strength in the dollar index. And that would also mean we'd expect to see gold weakness, and we'd expect to see euro US dollar weakness as well. So this is one trade I'm potentially looking at. If you see here the euro US dollar, now what we have here is a Harami inside bar. Now that Harami inside bar can be a powerful technical signal. And if we get high inflation, then we'd expect to see dollar strength, and we'd expect to see euro US dollar downside. And if this breaks lower, you would expect that break to carry on and the first target of that 1.2100. So that's one thing that I'm looking at here very carefully. It's that Harami inside bar pattern. If you can see, we got a potential false break here. So if we get high inflation, then what we'd anticipate is we'd anticipate high inflation above 1.8% or above sort of 0. Let's say above 0.4%, 0.5%, above anything above 0.3% for the month on month, anything above 1.7% on the year on year will result in a stronger dollar, and that would be a gold short or a euro US dollar short. Now that's the market is twisted that way because of these recent spike higher in the US 10-year yields. There's real focus on this. And the expectations as well, you know, is the US going to recover more quickly than expected? Is this a dollar weakness story? If you look here, has there been a trend change? Well, what we've noticed is that there is that break of that recent trend line on the dollar index. Okay, so what market participants are saying is this a pullback or is it start of a different trend? Now, at the moment, no one knows because there's a bullish case and a bearish case. My view is that the bearish case for the US dollar still remains in place, but look at this level, key support level. I'm going to go to the weekly chart. It's not surprising to see a bit of profit taking and a bit of pullback. For me, the real line in the sand for the dollar is this 93.95 region. You know, for the US dollar to sort of be bullish, I'll need to see those levels broken. Now, of course, this is potentially the first, the first stage in a potential trend change. So CPI data, very, very important today. And it's one of the first times we've been seeing economic data coming back into importance. So remember, what we said, the dominant currency sentiment. Yes, the dominant currency sentiment is pound strength, but it's hard to find a currency to pair it with. Reason is, you look at the markets, commodity markets are quite mixed. We're seeing some upside in oil, some downside in copper, and range is generally quite muted. Looking at the S&P 500 futures, we can see that futures markets in the equity are sort of down towards around flat for the day, so not particularly much going on. FTSE 100 moving down towards that key support level. Don't forget, it's a nice key support level for the FTSE 100, just at that 6670 region, 6640 region, key support. You'd anticipate buyers at those levels. We also have currencies are quite mixed. Aussie weak, CAD, a little bit of strength on that higher oil, New Zealand dollar weak, and we're seeing strength in US dollar, Swiss franc, Japanese yen. So taking it as a whole, it's a mixed risk tone, if anything, pointing a little bit almost to the offside. So you'd expect like pound Aussie upside, maybe pound New Zealand dollar upside. I think pound Aussie upside could be one potential. Let me just have a little look at pound Aussie. Where is it? There it is. Yeah, potentially like pound Aussie could be one alternative. You know, looking for any retracement down to that pivot point. Notice we're just breaking out of that key trend line on the 4-hour chart. So wouldn't want to be buying at these levels because we'd literally be buying into resistance. But let's just get this right. I like to always draw trend lines which are outside prices. I don't want to see any candlestick action going through a price. I want to see the trend line completely clear of all candlesticks. So when you get a break, you get a clean, clear break. So on the 4-hour chart, finally got this right. We've had 1 touch, 2 touch. That's enough in this instance. Usually technically like a 3 touch, but that's enough. And a break of that level to the upside would be indicative of higher prices in the pound Australian dollar. Otherwise, any retracement back down to that pivot point here would make sense for buyers at that 1760 region. So that's definitely something to be keeping an eye on. Now, going back to the major currencies. Now, let's say we get a scenario where inflation is lower. Now, yes, that could result in some US dollar weakness, and that could result in a little bit of gold or silver upside. But the main story today is higher inflation. The path of least resistance for the dollar is to carry on over the last recent days, is to carry on its move higher. So that's why my bias in trading for today is I'm only interested in trading a move higher in CPI. So I'm looking for a move above maximum expectations, above 1.8%, above 0.04%. I'm not that interested in the move lower because that's pretty much the status quo, and that would result back in that return to dollar weakness. So we could see some dollar weakness if we get low low inflation print rather. So that's something to be aware of. Other thing to be aware of is in the oil markets. We've seen oil moving higher, and we again seen that Harami inside bar pattern, that clean break to the upside. Harami inside bar, clean break. Oil markets have reasons to rally, hopes of the vaccine, hopes of a return to normality in terms of demand, and the reflationary narrative that the world's getting back to normal, all been supporting oil higher for quite a while now, since the end of last year, and that optimism still remains very clearly and very strongly in the market. And yesterday saw a nice break higher, and that remains potentially a buy on dips around that 52.72 region. But remember, we do have key data coming out later, and that key data is the inventory oil stock level that's coming out at 3:30 GMT, so look out for that. Private data yesterday, we saw a draw of 5.8 million. So for this to really surprise to the upside, we would need a draw of greater than 5.8 million. Although it says the lowest expectation is 4.98 million, the private data yesterday showed a draw of 5.8 million. So we'll need a draw of more than sort of 5.8 million to surprise the market and result in more upside. Obviously, if there was a large build in inventory, we'd expect to see some pullback in oil prices. So oil traders be very aware of that going into the session. Aside from that, it's other than that, a very, a quiet day. There isn't much data. We're just focusing in now on the CPI data that's coming up shortly. So that's the key focus. 1:30, I don't want to miss that coming up. And do remember that if we do get weak inflation, then that does open up that pound US dollar upside as well. So you'd expect to find buyers, say we have the inflation data, and if the inflation data is low to as expected, then we would expect buyers at 1.3625 as the Bank of England walking back from negative interest rates should continue to support the pound. So just going to run through the different options that I'm seeing for myself. First of all, if we get weak inflation, then that should be weakness in the US dollar. We'd expect to find lower bond yields, and you would anticipate pound US dollar long from 1.3625, and potentially worth having a look at potentially a gold long as well. Just looking at gold charts on the 4-hour, what we can see is we've got potentially this move higher from the 1.1864 region if we get weak inflation. Now, let's suppose we get high inflation, that when it comes to the data points, it comes in above 1.7% or 1.7% or higher, or 0.3% or higher for the month on month, then we'd expect to see a spike higher in bond yields, and we'd expect the dollar to track that, and that should give support for a gold short. We expect to find sellers on gold, and for sellers on gold, that would be at market with stops just above 1864 would be the the ideal place to short that. And you can see you got that sort of that false break of that Harami inside bar pattern there. So very tight stops can be run just above 1864, looking for a move back down 1825 and beyond. And the other option, of course, is the Euro-US dollar pair. You can see that the Euro-US dollar, stops running above, just above 1.2213 would be enough. So if you've got high inflation data, stops running point 1.2213, first target 1.2100, get below that, and it's back down to 1.200, 1.1950. So that's the key things to be looking out for later on the session. I hope that helps key people into what I'm looking at and some of the key expectations all about the CPI data today. Just going to get to the questions. Titus, shouldn't gold push higher on rising inflation? If we get the higher inflation, what we'd expect to see is the initial reaction is a stronger dollar. Because if you get higher inflation, you'd expect to see outflow in bonds. We'd expect to see the bond yields moving higher. It's expectations that the Fed might start, tapering more early than expected. There's a better outlook for US dollar growth, better outlook for the US dollar, and that stronger dollar would result in gold weakness, Titus, because yes, inflation expectations, if inflation gets out of control, that supports gold. But if inflation is rising and it's going to result in the Federal Reserve normalizing more quickly and raising interest rates, then gold will sell off. And you remember that reaction of gold at the end of last week? So this idea that gold may be not so necessary as a hedge if life comes back to normal. That move lower there was reminiscent of that Pfizer-BioNTech sell in gold as well. So below this trend line is a key for gold. So technically, watch this trend line. Stay below, and sellers are still in control. But for now, higher inflation, higher CPI data would be a gold short. Yes, sir. Yeah, pound yen. Yeah. Now, pound yen, yes, sits at a very good technical level. If you look at the pound yen, let's see, Aussie, hang on, let me just see. Yeah, if you look at the pound yen, technically it sits at a lovely, lovely level, but that's about it. Yes, sir. I can just see, you know, yes, it's nice resistance level. The thing is that the pound is gaining at the moment, yes, sir, on those comments from Bank of England's Bailey. And because Bank of England's Bailey sees less likely interest rates, pounds move higher. Now, what would have resulted in the pound selling off? It would be like rising COVID-19 cases in the UK, something like that, yes, sir. Otherwise, if I was long pound yen here, I'd be taking profit at this level. So it's not surprising to see a bit of profit taking, but if you put a gun to my head and say which way is the pound yen going, I'd anticipate the pound yen breaking out because of the negative interest rate comments from Bank of England Bailey. Less chances of negative interest rates, that's more bullish for the pound. We've got Brexit solved in the UK now, that's all sorted. So it's only that COVID-19 issue that's dragging the UK down. Otherwise, I do see more upside for the pound. So the only thing going for this, yes, sir, is the technicals. So, okay, you know, technically you can run a tight stop there at 143, and that's fine. But I don't see the fundamentals backing it up. That's my opinion on it, yes, sir. And that's the reason for the opinion. Remember, for those of you who are new, when interest rates rise, currencies appreciate. When interest rates falls, currencies depreciate. Rising interest rates, rising currency. Falling interest rates, falling currency. Yeah, it does seem poor risk reward to go long pound yen. What I'm saying, Warren, is if I was long, I'd be taking profit here, but I'm not long, and I wouldn't be getting long at these levels. But intraday, I wouldn't have a problem with like a 14150 long. So a retracement back down to that 14150 level, back up to 142, I wouldn't have a problem with that. But no swing trade here for me. The thing to be looking at is if it breaks higher, then take a return to that level. That's what if it was long, to go long, you obviously want risk on environment because you want the yen to be weak. As long as risk on trading's in order of the day, then break here, then look at a retracement there. That would be nice. But obviously at the moment, you know, we'll see what happens. Yeah, that's right, Warren. You make a good point. There's absolutely no, you know, you don't want to buy at these levels. So YASA, yes, you know, look, it's a great, it would be, if things were bearish for the pound and strong for the yen, that would be a fantastic trade, wouldn't it? YASA. Unfortunately, you know, at the moment, it's the other way around. It's bullish for the pound and mixed picture for the yen. Yeah. Yeah, very good. Okay, guys, we know what to look for. 1:30, that's the key event for today. CPI data. I'm due back to be here on Monday. And oh yeah, that's good, Aaron. I'm glad. Yeah, I'm glad that helped. You know, any issues or any questions, don't forget you can always contact me direct, giles.coughlin@hycm.com. Always happy to help out any way I can and help you guys, you know, do the best in your trading. So thanks everybody. Great session. Thanks for your comments, questions as always, and take care and have a very good afternoon. Thanks now, guys. Goodbye.